Ladies and gentlemen, I'm going to unveil to you the next Tesla. It is also probably known as the China effect. We're going to discuss that. We have a slew of earnings coming up next week, including United Airlines, Netflix, Citrix, Texas Instruments, JetBlue, Procter Gamble, Intel, and more. Find out which ones are my favorite. We're going to go through all that, our algo levels, as well as my final thoughts. I am Mark Melnick, and this is the Newsbeat Show. No music here tonight, so I hope you guys can just simply read this, pause it, read it, hit play when you're done. Let's just get right into the action, all right? No music. You can hum it in your heads. That's okay. I want to talk about the new Tesla. Now, when people say the next Tesla, I don't think people really have, and I'll pull up a monthly chart just to give you an idea where Tesla has come from. You have to remember that these common shares of Tesla were at one point $14.98, not too relatively long ago. I mean, you're talking back in 2010, talking basically about 9.5 years ago when Tesla was literally trading at a fraction of where it is today. Now, Tesla, when it came to the analysts trying to figure out Tesla, there was a lot of drama. Analysts had no idea really how to figure out what this company should be worth. To this day, they still don't really have a good idea of what should be the true value of Tesla. I mean, you have to go back to a time where it was about a $2.5 billion company. Today, it's a $92 billion company. But what happened? What happened with the company that made it so much more valuable today, outside of course, a higher stock price? Why should it be valuated higher today than it ever was? Well, Tesla was a breakthrough in technology. Now, I think every other car company in the world who wants to compete will be going into this form of electric engines, non-fuel, non-gasoline based engines. You could color it as many ways as you want. I think there are just as many. There's more harm to humans driving a Tesla than a gas-filled automobile, but I do feel it is healthier for the environment. But I don't want to get into that right now. The point is, I want to talk about why Tesla got to where it is, how it actually accomplished it, and what is the next company that is right on line or in line rather, in my opinion, to become the next Tesla. Now, Tesla, interestingly enough, you don't see many cars. My neighbor owns a Tesla. Okay, like I parked in the driveway. My neighbor owns a Tesla. You don't really see it as often as you see other vehicles. In fact, they don't really sell many vehicles yet. It's worth more than Ford and General Motors combined. Ford is a $36 billion company. General Motors is, let's just pull that up, a $50 billion company. It's worth more than General Motors and Ford combined. And Ford probably sold more cars last month or last quarter than Tesla has done in their entire lives. Ironically, Tesla is the one that goes up. Now, Tesla, just to put things in a simple perspective, announced really solid earnings there, in my opinion. On October 23rd, 2019, the stock gapped up, closed at 299.68 over here. Let's call it $300. And since then, since their last earnings report, the stock went from 300 to about 550, rounding off. So it went up since closing on its last earnings report, literally 2.5 months later, from 300 to 550 is where Tesla went. The exact high is 547.41. Now, the interesting thing of why Tesla, at least in this trader's very logically humble opinion, is because they started breaking into China. If you just look at a lot of even what the analysts are saying with tax credits, basically governments paying people to drive Tesla. Piper on January 10th said analyzing the company's potential in China. And they started opening up a factory there in China. So Tesla started opening up a factory in China. And then all of a sudden, they had the Musk was unveiling it. He even threw his coat like a stripper. He went on stage in China and was like twirling his coat. I'm surprised they weren't throwing, yuan at him. Here you go, like Chinese dollar bills at him. And he literally spun his coat in midair and went woo and threw it in bringing a lot of people back to their bachelor days. But you know, I had to stop and think about what exactly was happening there. What exactly was happening with Tesla during that moment? And what was happening was they were breaking into China, and the biggest issue with Tesla was the cost of their cars. If you remember, for entire Tesla's existence, at least for 9.5 out of its 10-year existence, selling a car loses them money. I think to this day it still happens like that. Every time Tesla sells you a car, they lose more money and more money and more money. It basically, to put in a very silly analogical term, would be like me buying $100 bill off you for $120. There's a lot of analogical similarities between Tesla losing a big chunk of money every time they sell you a vehicle because it costs them more money to produce and get you that vehicle and deliver it to you than it does for you to actually buy it. Now, when Tesla goes to China, the interesting thing in China is the wage, is the minimum wage. So the national average in China and for the entire country of China was about 82,413 yuan. That's yuan. That's to US dollars, to give you an example, that's $12,000. The average Chinese worker, on average, makes $1,000 a month. Now, you might be sitting there thinking to yourself, where's Mark getting with this? Are you talking about Chinese labor laws or labor plans or the fact that they should be paid more or potentially less? No. Do you remember a term that we used to use in the market many years ago called a sweatshop? And they're basically referred to a lot of third world countries and developing countries where they would hire labor for so dirt cheap to produce their product. In fact, Nike was very big on, and it's like the step up, it is like one step up from slave labor, which is evil and horrible, and it was sweatshop labor. And that isn't actually so evil and horrible because unfortunately, people look at countries in extreme poverty, and I'm getting to a point here, and I'm going to explain to you why a name that I'm watching is going to triple in value off what I'm saying. So believe me, I have a point, but I want to explain myself to you. So, okay? So when Nike was producing these shoes in the Philippines, at one point I think they were paying like it was something stupid. It was many years ago. It was like 78 cents a sneaker, something like that, like two sneakers, you add them up, whatever, like, but 78 cents to produce like a sneaker in like the Philippines. It was just so stupidly cheap because they were using sweatshop labor. And you'd have somebody who comes in, they take a contract, they hire a bunch of locals who are living in extreme poverty and pay them dirt wages. And then what happens is it increases Nike's profitability because they're not paying a lot of money to produce their sneaker and they're breaking no laws. China, ladies and gentlemen, is the stepping stone in wages. Like if here's the US, like US giving the top wages, and I know there's some countries in Europe with smaller populations that give more wages on average, like Zurich in Switzerland. All right, here's the United States. Here's third world countries. You want to know where China is? Right there. It's a stepping stone. It's a stepping stone for cheap labor. When you have cheap labor, when you want to produce something in China, you're reducing the costs dramatically. See, a lot of analysts are interested in the market that opens up when you're selling a product in China. The truth is, most products go to be made in China, not to be sold to Chinese people, but to be sold outside of China. Just look, if you have any children, look at all their toys. Go on Amazon, look up toys for kids. Heck, I'm buying like Power Ranger toys, made in China, made in China, made in China, made in China, because it's cheaper to make there and it comes to your door much less expensively than other things. Now, Tesla did a win win situation. They not only get to produce their cars at a fraction in their batteries, whatever they're producing, the big factory there in China, they get to produce at least parts, let's call it, of their vehicles at much, much less money. I don't know what the average Tesla employee makes. It was between like $40 and $60 an hour. Imagine this. Imagine with 70-hour work weeks, imagine Tesla employees in China getting way above minimum wage and way above average wage and making like $5, $6 an hour. To give you just, and I'm making that up, the wages aren't probably fully settled in yet, but to make $1,000 a month, they would have to be paid around $3 and change an hour to work that much. I'm thinking that the average Chinese workers work more than the average American, just if you didn't know that. So when I say 70-hour work weeks, you might be looking at yourself saying, I work 9 to 5, 5 days a week. And it's like, yeah, you're, you would be considered, on vacation if you were in China doing that sort of work week. They're going to be getting paid 5, 6, 7, $8 an hour if you're a manager, maybe 10, 11 bucks an hour, like US dollars. And you would be macking over there as an average Chinese citizen. You'd just be like, you know. The point I'm making is Tesla will be able to easily turn their cars profitable by building them in China, much more profitably, and they have access to the entire Chinese market. It is such a win-win for the company. And over the years, with all the analysts getting this one wrong, with the Bank of America reiterating, remember $17 targets when the stock was 150, reiterating $40 targets when the stock was trading above 250 here back in 14. You remember that? There was a time where Tesla was doing that. And now it's taking off to the moon, and nobody thinks it's ever going to go down again. And everybody lived happily ever after the end, right? But what if there was another company breaking into China? What if there was another company that was actually going to be part of a major board in China? What if there was another company right now, as we speak, right now, that is breaking into the market in China? And there is a company like that. And I am, of course, going to talk about, if you have not seen the article, I am talking about Beyond Meat. And what happened over the weekend here happened on January 19th. So, yeah, that's the weekend, Sunday. Happened on January 19th, coming out of Beijing. A reporter from Beijing News learned from the China Plant Food Industry Alliance, CPFIA, the China Plant Food Industry Alliance, on January 19th that Beyond is officially joining the alliance. Do you understand what that means? Union Secretary General Xu Yan revealed that Beyond Meat plans to land in the Chinese market in the first quarter of this year. This is the Union Secretary General of China saying that Beyond Meat is going to land in the market for the first quarter this year and is currently urgently going through the approval process for imported foods. I wonder how much money they put in his pocket. And the online sales channel is expected to precede the supermarket. Do you understand that? People are going to be buying this disgusting, absolutely deliciously tasting artificial meat in China. Xu Yan also said artificial meat brands such as Quorn, Quorn in the United Kingdom and Beyond Meat in the United States are speeding up and urgently seizing the Chinese market. Domestic artificial meat companies should practice their internal skills well before they can compete with foreign brands. This is coming out of the Union Secretary General of China. He's basically saying, yeah, we have other Chinese companies making this plant-based meat, but you guys suck. And get ready because the competition is going to come in. That's what he just said. That's the translation. I'll read it for you. The translation. It was written in Chinese. I'm literally translating from Chinese to English using Google Translate. You ready? These are his words according to Google Translate. No paraphrasing. Domestic, meaning he's in China. Domestic meaning in China. Domestic artificial meat companies should practice their internal skills well before they can compete with foreign brands. Beyond Meat is going to destroy the Chinese market. I'm putting a $400 target on the name. Now, I know it's everybody's drama muffin. Oh no, this stock is so stupid. It's everybody. Tyson is going to compete with them. Blah. You know when the last time I heard all those tears? Here. You need one, bro? You need a tissue? You want to know the last time I heard those tears? When people were talking about, oh, BMW, General Motors, Ford, Toyota, they're going to make electric cars and Tesla's going to be nothing. The same whine babies that I heard about that on Tesla are the same whiners that are looking at Beyond Meat and saying, Tyson's going to compete, they're done. Yeah? How many Tyson plant-based products can you buy in China right now? But they're so much of a bigger company. Exactly. Sexy brands, sex appeal. Tesla has sex appeal. If Ford or General Motors put out an electric vehicle, that does not have the same sex appeal as a Tesla. And if Tyson or Purdue or, you know, I really don't care if their baloney has a first name. But if any of these other companies come in and they try to put in this artificial, or excuse me, not artificial, plant-based meats, Beyond has that sex appeal. So what's happening over the weekend? And not many people are going to see this article. Not many people see it. It came out of Sina Finance, the Beijing news network. Not many people are going to see this article. But you want to know Beyond, so Beyond is obvious, in my opinion. I didn't read this in the article, but to me, it's so expletive obvious that they're actually going to open up a plant in China. What are you, crazy, bro? You realize how many more? There are 3.4 vegetarians and people, Chinese love their meat. Chinese people, like from China, love their meat. They're the largest consumers of pork on the planet. Many of you are probably sitting there thinking, like, how many Chinese vegetarians are there? And that is only a half relevant question. According to the latest statistics, there are approximately, it may have, I mean, everything's an estimate, 68 million vegetarians. Compare that to the 20 million in the United States. And I don't know about you, but the best vegetables I'll get from anywhere isn't from the local Italian pizzeria, isn't from the local cheesecake factory. The best vegetables here are by far Chinese restaurants wherever I go in the US. By far the freshest, tastiest. Chinese have such a respect for food and quality that they will pay more for things that do taste better. So the China Plant Food Industry Alliance actually said that Beyond Meat joined, and as a result, they say the artificial meat group standards are going to be introduced in the first half of this year, potentially the first quarter. Now, there is something very interesting here. There is there's a Beyond on January 15th, a Beyond Meat delegation came to Yantai Shuangta Foods. It's a publicly traded Chinese company, to discuss cooperation and Shuangta's Foods scientific research and development, production, and quality management. When you're doing research and development into a food, you're trying to grow pea protein on Chinese land. And I don't know if you know, but China, for the most part, is like a huge chunk of topsoil. A huge, like, China is sitting like on the most fertile soil in the world. It feel size and everything. It's just too perfect. And if you want to go a step further, Beyond doesn't need to go to China to make money on their food. They're already profitable. Beyond Meat makes money, unlike Tesla. Beyond Meat makes money. You want to know why they're. Beyond Meat is a $6.7 billion company. Tesla's a $98 billion company. The only difference between the two, it's much easier to sell 100,000 fake burgers than it is to sell one Tesla. That's the difference. This isn't a food company, ladies and gentlemen. This is a technology company. All right? They didn't sit there and we took the peas and we mashed them and we put a little bit of corn oil and a little salt and pepper and we make this little thing and look, it bleeds and it's a burger. No, you're talking about like secret ways to prepare. We're talking about highly processed food. Proce- Food that is so highly processed that it makes a chicken McNugget look like it came right off the bird's behind. It's that highly processed. This is a technology company, and technology will make the food of the future. And if you think that a company like Tyson is going to step in the way and do all these things, and oh, they sell way more than Beyond, you're right. But I could tell you that General Motors, sold more cars, maybe, definitely last quarter than Tesla has in their life. That doesn't mean Tesla is not worth more than General Motors. Tesla's worth about two General Motors at this point in time, at this juncture. It's worth about General Motors times two. So don't tell me that, oh, these companies are too big and that competition can't come in and these companies are too small to come in and compete. We're seeing it before our eyes that that's just simply not true. Tesla doesn't have a lot of Chinese car sales, compared to Ford or General Motors. But the thoughts, the prospects for the future, to sell cars in China, not only sell cars in China, way more importantly than selling cars in China, to build your parts in China. You see, ladies and gentlemen, what has been happening? You see, so many people, I find it so funny when people get so caught up in the drama of US China geopolitics that you saw what was happening. That you had companies like Foxconn and all these other Chinese companies move to the US to bypass the tariffs. You have companies in the US moving to China to bypass labor. Too expensive in China to ship it across the Pacific Ocean into California. US is like cheaper in China to not pay that dude $250,000 a year, to not pay this dude $120,000 a year, and to pay that Chinese dude over there $30,000 a year and create the parts cheaper and pay less money, and I guarantee you less benefits. So you're telling me, yes, the smartest thing for Tesla to do is to open up a factory in China. It's it's so logical. I don't even know where to begin. I guess I did. So putting a $400, that's my expected price target. And at $400, you're talking with a $24 billion company. And if you think that is crazy, I'll remind you that people think that when Tesla was trading at $5 billion valuation and they weren't selling vehicles, just like they're not today, when they were, at a $5 billion valuation, that was just way too lofty. People are willing to invest in the potential of the future. In fact, the biggest names you see today, ladies and gentlemen, were once little crap companies that had zero chance of making it. Like, Amazon. Keep in mind, there's a 2-for-1, 3-for-1, and 2-for-1 split over here. So these prices were 12 times cheaper. Yeah, 97. You ready for this one? You ready for this one? You ready for this one? This stock, based on today's prices, was $1.31 for Amazon, and they couldn't make money if their lives depended on it forever. They couldn't do it. They were selling stupid ebooks and Kindle books, and nobody gave a crap. And bookstores aren't going to go out of business. Barnes and Nobles, give me a break. Oh my, hey, what's happening? There's all of a sudden they're sending everything to my house in this little cute brown box. They're doing it 2-day delivery. Okay. Let me remind you of a stupid search engine that does nothing, like Google. What? No splits ever. Opened up at $50 in 2004. Couldn't make money if their lives depended on it. But now all of a sudden they were. Facebook. Couldn't make money if their lives depended on it. You know how much money Facebook was hemorrhaging? 2012, not even too long ago, relatively speaking, $17.55 a share. Do I have to remind you that Apple lost money in the early stages? That these shares of Apple were sub $1 before 2-for-1 splits happening twice, followed by was that a 7-for-1 split? Do I have to remind you of that? Do I have to remind you of that? Of what? $10,000 bet in Apple in 2000 that you'd be worth probably 9 figures. Not 9 figures, excuse me, 8 figures. You'd be worth way over $10 million. So when you're looking at a beyond, so these are monthly charts here. When I show you this beyond, this thing just got started. If you believe that in the future technology is going to dominate food, if you do believe in the future that there are going to be more vegetarians, as long as human population goes up, there'll be more vegetarians. There's plenty of scientific studies out there talking about the health detriments of eating too much meat. You've heard it all the time. Americans eat too much red meat. Beyond will be the stock of the future. So I am raising my target. I believe it's in the 310s to 320s last and beyond. And again, I was the person. I was the person who came out with a $200 target right over there on June 6th. I have a video from last year. June 6th, stock closed at 99.50. It was up after hours to like 110. And I put a $200 target, and people were going nuts. It induced a lot of drama, similar to talking about bullish Tesla prices. Like that just pisses people off because people who are fundamental guys, they don't get it. And I respect it. Look, I respect fundamentals, and I'm going to go through some earnings right now. But you guys have to realize that people don't always buy things just based on how much money you make. They buy things because they think of how much money you can make in the future. And you're seeing a lot of that right now. And speaking about a $6.7 billion company right now with the markets at all-time highs, this might be one of the most undervalued stocks in the entire stock market. Forget about just food or technology, in the entire stock market industry. This might be one of the more undervalued companies out there. How about some earnings analysis and thoughts? Got some names here. Let's talk about the ones that, Netflix, you got a nice bullish setup here in Netflix, and I find Netflix to be, definitely one of the funniest names out there because you have the analyst and they sit back and they're, you know, biting their nails and they're trying to figure out, if they're going to upgrade or reiterate on Netflix. If the stock gaps up on earnings, they upgrade it, and if it goes down, they just reiterate their already higher target. Netflix earnings are going to suck so bad. And I know all of you, but Mark, they increased their subscriber numbers. Really? Those same people who talk like that weren't talking about that when Tesla was selling more vehicles, when they were trading at 150 bucks. They weren't talking like that when Beyond keeps adding more customers every single day that goes on. They don't talk about that because there's some people out there who like to look at the entire rosy picture and they have rose-colored goggles on and there's the whole entire world is rainbows and strawberry shortcake, blowing hearts and strawberry flavored hearts and everything smells like cupcakes, and I get it. And there are people out there who do think like that. And I love Netflix, and I have zero, 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 zero urge to cancel my Netflix subscription. I absolutely love it. Now, let's take my own feelings for the service and let's put it right over here in the corner. And let's take a step back and you stay right there. I'm going to come back to you later. And let's just talk about the inevitable, abysmal garbage numbers that they're going to produce. Okay? We're going to start off with from the company's mouth saying that they're going to earn 51 cents a share. That's going to fall short of the 81 cents consensus. Who's analyzing these companies? They're expecting to see revenue of 5.44 billion versus 5.52 billion dollars. Now, when asked, this was back on October 16th. So I'm talking about where they were on October 16th. This is where they actually gapped up on these abysmal earnings. So again, I'm not saying that it can't gap up. I'm just saying the numbers are going to suck when you read them on paper. And stop sugarcoating things and you'll see the same thing that I do. So when asked about competing services like Amazon, YouTube, and Hulu, they weren't even asked about Disney. Disney at the time, and Apple TV, and HBO Max, and Peacock, and YouTube, and Hulu, and Amazon. They said we are still small compared to linear TV. Now, that is probably the stupidest thing I've ever heard of in my life because basically what they said is we're still small compared to, your average TV station with, 500 channels. And it's like, it just sounds so dumb. It sounds like such an excuse. So they just came out and they said the launch of competing services will be noisy. We'll expect to grow nicely given the strength of our service and the large market opportunity. They said, by the way of example, our growth in Canada, where Hulu does not exist, is nearly identical to our growth in the US, where Hulu is very successful at about 30 million paid memberships. Um, you want to know the problem with Netflix? They put out 100 garbage shows. 20 to 30 of them are amazing. Stranger Things, come on. Who really, I can't stand that show. Like, who really says that about Stranger Things? And then what happens is that little cute girl actress 11, she's like with her nosebleed coming out, moving things like if she's a Jedi master. You know what she does? She comes to the boardroom inside Netflix and she says, I command you to give me 32 times the salary that you gave me last season. And you know what they say? Sure, we have no other choice. And then all of a sudden the next season 2, way more expensive than season 1, season 3 way more expensive than season 2, and has nothing to do with the special effects. Netflix said they're preparing for a new wave of competition for a long time. You're preparing for it, but it seems like you're failing. Because I'll tell you, I'm watching mainly Amazon Prime now. Maybe I'll watch a little bit of Hulu. I rarely watch Netflix now. And yeah, I do have an appetite. I don't think people are going to quit Netflix to subscribe to Disney Plus. Of course, there'll always be people out there who do it. Netflix earnings are going to suck technically. It is bullish, so I do have mixed feelings on this one. Um, should we talk about Intel? So Netflix, by the way, is reporting Tuesday after the bell, so tomorrow after the close. Intel is reporting Thursday after the close. And this is one I actually really like. This one I'm probably going to officially put on my list again. Newsbeat Live members get all my earnings plays as part of their membership. Get to take advantage of that if you wish to see them. We're off to a nice start of the year from our plays. We don't give a lot of plays, but um, it works. It works overall. So let's talk about Intel here for a second. Intel is going to expletive crush it, and I love this one long. See, my problem is even though I think Netflix numbers are going to suck between the setup and everything, I'm not brave enough to short it or go long it. I'll tell you that right now on Netflix, unless something dramatic happens like tomorrow, I'm likely not going to want to play it. This is one that I want to play. This is Intel. Now, when most people see Intel, they're like, "Oh my God, Mark! It's probably look at the weekly, Mark. It's at like all-time highs. It just hit all-time highs here." And I'm like, I know I'm a little bit more old school than some of you traders, but no, Intel is not near all-time highs. All right, get that out of your head that Intel is near an all-time high because da 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 da. It's not. You couldn't own any tech company in 2000, hold it for 20 years, and be up money. Some of them you could. This isn't one of them. Here's the all time high in Intel, made right over here in the month of August of 2000, 19 and a half years ago. One score and several days ago. That's the all time high for Intel, 7581. And this is one of the companies that has not participated in the all time high rally. And they're going to crush it. They're going to beat earnings per share, in my opinion. Everything I say is my opinion. They're going to crush it in revenue, in my opinion. And it's going to be great for this company, in my opinion. And I think it's going to go higher, in my opinion. Because they're better off now than they were back in 2000, in my opinion. And this stock, I humbly believe, will be a name that I do play to the long side. Again, if you're a Newsbeat Live member, you'll get to see it in real time if I do it. If you're not, then I'm just talking to you. One more name that I'm probably going to play before I give you guys the levels. And I have a lot of stuff here. I have I wrote them down. I wrote down like my thoughts on like all these earnings ideas, and I'm writing them down on these index cards. And like I got Teradyne here, so TER to the long side. I'm going to talk about that for a second. Another stock that is not remotely near all-time highs. Another name that back in 2000, 115.44 was the all-time high of Teradyne. Now, Teradyne is probably not the sexiest company that you've ever heard about. Netflix, Intel, definitely a more common name or sexier name, as I like to say. But taking a look here at Teradyne, I think they are just going to absolutely take every analyst expectations, take a baseball bat and like, you know, a baseball and some steroids, of course, inside you because you really want to hit it hard, right? And just pound the living, insert your favorite word here, out of the analyst consensus. I think they are going to destroy it on revenue, badly destroy it. I think the revenue numbers are going to look good. I think the earnings per share numbers are going to look good. And I just want to remind you, last time Netflix, a name I have zero plans on playing this one because it's too bullish technically, and the numbers are gonna suck. So does it go up or down? I don't know. To me, it's a coin flip. I don't like coin flips. So last time I do want to mention on those garbage earnings and projections, it did gap up. We actually shorted it on this day, as I recall, and we actually caught it to the short side, and it went all the way down. And then it went all the way up again with the market. And I just think it's, again, love the service. Don't use it much for now. Still pay for it. Numbers are gonna suck. So Teradyne, these numbers I think are gonna be good. Um, they're seeing for this quarter coming up this week 64 to 74 cents versus the 63 cents expected. They see 540 to 580 million in revenues. The consensus was 541 million, so they'd have to be at like the dead bottom of the range to miss it, which is, I don't know, how likely is that? Probably not super likely. And last week on January 13th, last Monday, Evercore put an $85 target on it. That was up from 65. Respect the analyst, talking about excellent exposure to 5G. Interestingly enough, we, for educational purposes only, as always, with names like this, um, we interviewed the CEO of Sequans. That ended up being an exclusive Newsbeat video. We interviewed Sequans CEO Georges Karam, and it was a very good interview. Hit him up with like some solid questions. Very gracious that he took our interview. Just want to point out, ever since we did the interview with him, what was it? I could look up the exact day, but every single ever since we did the video with him, was it about on? It was, I think, on a Thursday. Was it January 9th? I mean, I could look it up. Just give me one moment. All right, we interviewed him on January 11th. So right over here, we interviewed him. So here's January 10th. So basically, a week later since we interviewed him, this stock has risen 50% in value. We interviewed him over the weekend here. The stock moved up 50% in value ever since we interviewed him. So 5G is a very hot sector. Why am I bringing up 5G? Because the analyst who upgraded Teradyne last week quoted this. It says Teradyne also has excellent exposure to 5G and within the factory automation megatrend. So, you know, 5G, in my opinion, is going to be the next hot thing. I think 4G was huge. I mean, I don't think I know 4G was huge. I think 5G will be huge, and I definitely think it's one to watch. How about our algo levels for tomorrow? These levels don't always hit. Where is that? There we go. These levels don't always hit, but when they do, they tend to give me a very easy point to buy and sell on support and or resistance. Again, use it for educational purposes, use it for whatever you'd like. But those are the levels. Those are my algo levels, technical and algo levels for January 21st. That is, of course, tomorrow. So I just want to highlight some things recently. There are a lot of easy ways to make money in this market, and I think a lot of people listen to me and they take it the wrong way. Like, oh, there's that Mark Melnick. He's been trading almost going on 21 years, and it's easy for him. Well, yeah, what a what a jerk. And there are people who would actually like think that way, but I promise you, once you get past that sort of mentality, trading is only going to be as hard as you make it. And I know that sounds, right now you're listening to that and you're like, Mark, that sounds like such a generalization. I gave you a video, literally. Just look up Newsbeat Show 527 on YouTube. It's also on Facebook. Just literally look up these videos. They're the hottest videos. They're phenomenally popular. just look up our videos and just read it. It's called Value Town Free Strategy. It's not even pitching you into a link of the room. I don't even want to give you links in the room right now. Like I give you an email if you want to reach out to somebody, if you want to reach out to us and talk about the room. I think that's more important than just giving you a clickbait and sign up here. So you'll actually notice that if you do want to join the room, it's not as easy as just clicking in and typing in your credit card information. And whatever, I'm sure I'll change it back, but I just want to highlight the point that I am here to genuinely help you. I do these videos to genuinely help you. I'm not always trying to shove a product down your throat. Every time I show you these things, I show you these things out of the passion and love that I have for trading in the markets. I think people, if you're watching this video and you actually made it to this point, you probably love trading. You probably love the markets. And I promise you, no matter what you do with your life, whether you continue trading or you stop trading, or you take a break and then continue it later, one thing is in common for every single trader that I've ever met. They all think about trading all the time, whether they are traders or ex-traders or soon to be traders. They think about it all the time. It's the only job they really want to do. And I'm talking, I speak to engineers, accountants, doctors, lawyers, an astronaut. Look, could look them up on YouTube. And you speak to these people who just have such fascinating jobs, and the only thing they want to do is day trade. And I gave you a strategy that's working 85% of the times on every single name that was upgraded, every single large cap name that was upgraded on Friday, last Friday. So I'm showing you strategies that didn't work, months ago or years ago, and this is my favorite strategy of all time type of, nonsense because the market keeps changing. You could say it's your favorite strategy, but what works today might not work tomorrow. That's a broad generalization, but usually things that worked a year or two ago don't really work today too well. Most of the things, some maybe do, some don't. So it's always important to keep evolving your game and keep learning brand new things, things that were like genuinely created early, things that were created in a very recent fashion as opposed to old school. I mean, if you talk to somebody about an electric car 20 years ago, they would laugh at you. They would laugh at you. I remember my parents telling me that when she was a kid, my mother, when she was a kid, they were telling her that sidewalks were going to move by themselves and that cars were going to fly like the Jetsons. And that's where the idea for the Jetsons came out with. You ever see when the dude goes to work, like the floor is moving, it's like on a side, like that airport escalator that just moves forward, like George Jetson. That's where it came from. And a lot of times people get these things wrong. A lot of times they do get these things right. But I will tell you right now, you have to keep evolving and adapting your strategy because if you don't, I promise you, you're going to go through times where you might be doing well and you think you have everything figured out. And then next week, you're like, oh my God, what's happening? I'm losing everything. You gotta really be on top of the market and see what's working every single day. And that is one of the things I think we do well here. It took me a long time. It took me about 14 years of trading to finally take my ego and set it aside. I think a lot of traders are like, you know, if you're most traders trading a career as long as mine are obviously up, you know, probably millions of dollars if you've been trading over 20 years in terms of, trading profits made. But I will tell you overall that it took me a while to set that ego aside because nothing I did was wrong. I was making all this money. So how can you come and tell me that one of my strategies are off if I'm making money? And that was my mentality, and it was a bad and negative mentality, which I admit. I have grown from that mentality. And I don't wish to be that guru out there who just comes by and acts like everything is beautiful, only show you everything that's good, show you cherry pick charts of, what I like and where my strategy worked on a bunch of charts and what I'm looking for next week and sit there with my fingers crossed and pray it works again. It's not really about that. You got to really set your ego aside. You got to look at what's working and you got to execute upon it. Tomorrow, I found something that's working 85% of the time on Friday. And what I'm going to do tomorrow in the Newsbeat live room is I'm going to sit there and call bottoms and tops all morning on these names. So I do look forward to doing that with you ladies and gentlemen. Um, I hope you guys thoroughly enjoyed this Newsbeat show. This show, by the way, gets there's a group of very jealous gurus out there, perhaps, wink, who don't like what we do here. They don't like us shooting straight. So they tried to screw around with the YouTube algorithm by hitting the thumbs down button. I don't monetize these videos, so I'm not like one of those YouTube streamers like thumbs me up so I make more money. I'm not even promoting I'm not even promoting a link to join my service, but if you genuinely did enjoy these videos, thumbs up because what it does is it allows other YouTubers out there to find my videos and not get my video pushed down because a bunch of jealous, you know, a bunch of jealous children don't like our content circulating out there. So they thumbs it, they open up several accounts and they thumbs it down before the video begins. So fight back against trollism. Thumbs up the video so we can help as many people as possible. I hope you guys enjoyed this Newsbeat show. Happy trading, make money, and I will see you guys tomorrow on the Newsbeat live trading broadcast.